Ladies and gentlemen, good day and welcome to the Action Construction Equipment Limited Q4 FY23 earnings conference call hosted by Monarch Networth Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the call to Ms. Vedika from Monarch Networth Capital Limited. Thank you, and over to you, ma'am.
Good evening, everyone. I would first like to thank the management of Action Construction Equipment for giving Monarch Networth Capital the opportunity to host this call. We have with us the senior management of Action Construction. We have Mr. Saurabh Agarwal, Executive Director, Mr. Rajan Luthra, CFO, and Mr. Vyom Agarwal, Senior Vice President. I will now hand it over to Saurabh sir for giving the opening remarks, post which we will open the floor for Q&A. Over to you, sir.
Yeah, thank you. Good afternoon and welcome everybody to this earnings conference call for the fourth quarter and year ended March 23. Along with me in today's earnings call, we have our CFO, Mr. Rajan Luthra, and our Head of Investor Relations, Mr. Vyom Agarwal. I hope all of you have had opportunity to look at the company's financial statements and the earnings presentation, which has been circulated and uploaded at the stock exchanges. This has been yet another year of strong and resilient performance by our company, and the results are a testimony to our clear and compelling strategy backed by the strength of our biggest assets, our people and our brand. We not only navigated the short-term challenges with agility, but also made progress on our long-term strategic priorities. Let me take you through some of the highlights of this fiscal. To begin with, it gives me immense pleasure to report that we have crossed rupees 2150 crores operational revenue mark in this fiscal, and also recorded our highest ever sales and profits in the quarter gone by. Our growth of 33% is significantly ahead of the market in our sector. Our EBITDA margins for the year expanded to 11.4% from 10% last year, and our EBITDA grew by 51.5% to rupees 247 crores on a standalone basis, as against rupees 163 crores in the preceding year. We were able to increase our PBT by 58.4% from 138 crores in FY22 to 220 crores in the last year. Similarly, our PAT also increased from rupees 106 crores to 161 crores, thereby registering a growth of 52.2% in the last year. To brief you on the financial performance of the fourth quarter of last year, the operational revenue stood at 613 crores for the quarter, which is up by 10.4% sequentially and grew by 20% as compared to the same quarter last year. Our company was able to expand the EBITDA margin to 13.2%, PBT margin to 12%, and PAT margin to 8.5% in the last quarter. This was led by better product mix, improved price realizations, efficient cost control measures, and softening of the commodity prices. The EBITDA and PBT for the quarter stood at about 81 crores and rupees 73 crores respectively. We continue to be a debt-free company with sufficient availability of liquidity for growth. The Board of Directors has recommended final dividend of 50%, that is 1 rupee per share, for the year ended March 23. The board has also approved to grant ESOPs to the employees. The ESOP program has been designed in a manner that employees are incentivized and their interests are aligned with those of the company's performance. Now moving on to segmental business performance. We have strengthened our role as a market leader in Indian crane industry, and with our consistent efforts, we have scaled the business to over 1,525 crores in this fiscal. Last year, our crane business has registered a strong growth of 38.4%. The growth was both in value and volume terms. Our number of cranes have increased from 5,328 in FY22 to 6,584 in FY23. In crane segment, we have been able to grow our profits by 53% to 195 crores, with a margin expansion to 12.77% versus 11.58% for the year before that. Our margins for quarter 4 stood at nearly 14%. Our crane business is at its strongest in terms of size, scale, profitability, capability, and its impact on the nation's development. Further, we are very pleased with the growth momentum in the CE segment, wherein we have surpassed our projected growth. The segment has clocked a yearly growth of 42% with a revenue of approximately 250 crores and increased margins at around 9.5% on a whole year basis versus a 5.3%. And our margins for quarter 4 FY23 stood at 13.9% owing to the operating leverage. The material handling segment recorded revenue growth of 11.2% and stood at 170 crores, with margins at 12.33% as compared to 12% the year before. The agri division also registered growth in revenue of around 7%, but the margins came under pressure owing to inflationary impact during the year. We have also expanded our global footprint and increased our export sales by 90% year on year. The contribution of export sales has increased to 6.7% as compared to 4.7% the year before. Further, we expect that going forward, the export segment will contribute about 9 to 10% of the overall revenues within this year, which is in line with our medium-term target of 15 to 20% contribution from exports. After 2 years of pandemic-led disruptions, FY23 marked a return to normalcy in operations. However, geopolitical tensions and continued supply chain disruptions resulted in unprecedented inflation and volatility in commodity and energy prices. Central banks across the world responded swiftly with sharp increase in interest rates within a relatively short time frame. The Indian economy remained a bright spot in FY23 amidst the global slowdown. Real GDP growth for the year is estimated at 7%. Against the backdrop of a challenging operating environment, as aforementioned, the company's customer centricity, agility in seizing market opportunities, focus on execution, and proactive strategic intervention enabled it to post strong performance across all operating segments. Our model is crafted in a manner that enables us to focus on each business while harnessing the diversity of portfolio to create unique sources of competitive advantage. Our strategic positioning in the core sectors of infrastructure, manufacturing, logistics, and agri will provide necessary impetus to our growth trajectory. Looking ahead, India is one of the fastest growing economies and its prospects remain very strong for the period ahead. The infrastructure growth story continues to play a significant role in the economic growth and will have its multiplier effect on the economy. We believe that going forward, the strong demand scenario should sustain itself, supported by government's unwavering focus on urban, infra, and rural development. The increased capital expenditure announced in the Union Budget 2023 will further aid this growth in FY24. Going forward, in the current year, we expect a growth of at least 15 to 20% in our cranes, metal handling, and agri portfolios. For the construction equipment segment, we are looking at accelerated growth rates of 30 to 35% on an increased base. In terms of capacities, our cranes and metal handling segments are reaching their peak utilization levels, and in order to fuel further growth, we are currently incurring a capital expenditure of rupees 80 to 90 crores to enhance our capacity. The expansion will take shape from Q2 onwards and will enhance our installed capacity and will have a potential to propel us to reach a turnover level of rupees 3,800 crores in the near future. On the whole, as a company, we are looking at a 15 to 20% growth in our top line for the current year, with further margin expansion of 100 to 150 basis points. We hope we are in a position to revise these projections by end of second quarter. which will predominantly depend on the onset and intensity of the monsoons. Further, we remain optimistic about the medium to long-term prospects of the company and remain focused to deliver on our growth agenda. We will continue to drive cost savings harder and take calibrated pricing action while ensuring we protect and grow our markets. We believe that our building blocks are firmly in place and are on path of sustainable growth in all our segments where we operate, leading to expansion in top line, bottom line, and the margin profile of the company. With this, I would like to open the call for question and answer session.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Mr. Himanshu Upadhyay from O3 PMS. Go ahead.
Hello.
Good afternoon. Good evening.
Yeah. Hi. I'll just go ahead with my question. The agriculture equipment has been on the downhill in terms of units for the last 3 years, and the market was strong. Can you elaborate on what happened and the way forward here?
We are talking about, I just missed the beginning, which segment?
Agriculture equipment.
Yes. We have been in a little doldrum here, as I did mention in the last call, last quarter. And Vyom, I think you'll be able to clarify better here with respect to what really happened in the last quarter.
Yes. Hi, good afternoon, Himanshu. And as we all know that the tractor industry has grown by around 10% in last fiscal, and we have been able to register a growth of 6% in this space. When we talk about numbers, in Q4, our deliveries have been higher than our billings. That goes to show that our inventory with our channel partners at the end of Q4 is lesser as compared to the previous quarters. Currently, our inventory level with our channel partner is close to 3 to 5 weeks only. And one of the reasons that we have been reducing our inventory is the migration from BS3 norms to BS4 norms. So post-July, the registration of the BS3 tractor inventory will not be permissible. So, we have to reduce the inventory at the channel level. Owing to that, the volumes which you are seeing has shown a little dip. However, going forward, the crop prices, which is the MSP, the monsoon and the water reservoir levels remain, at normal levels, and we expect to experience a growth of around 10 to 15% in this segment in the current FY.
Thank you for that answer. I'll go on to my second question. On the material handling, last time we stated that we were having some issues and that was the reason for low growth in that business. Can we now assume that we are back on track and can do more than FY22 sales in numbers in this next year? Also, how has been our market penetration in that segment and the share of the market?
Yeah, market penetration has been very good. Our share is around 25-26%. And going forward, I think easily in the current year, we're looking at a 15 to 20% growth here in numbers, if not more than that. Because we have overcome those plant as well as supply chain issues. And you see the result of that even in the last quarter. Because even on a sequential basis, we were able to increase 15%. Going forward in this whole year, I think we should easily be able to do about 15-20%.
Okay. Thank you. And my last question is that how has the backhoe loader done for us in FY23 versus FY22? And in EBIT is now at 10% of the construction business. Would we like to grow the share from here on, or the margins will be the focus in the construction segment?
I think, I also mentioned in our last call on a quarterly result that, as we start to go around 250 crores and beyond that, our margins will start to fall in sync similar to cranes. And if you look at the quarter four numbers of 80 crore revenue, we have nearly touched 14% EBITDA margin here as well. So, and this is what I had mentioned earlier, that once we start to cross 300 crores, going towards 350 crores on an annual basis, the margins would normalize to, the crane levels. And we are already experiencing it. So hopefully, I think in the current year, yes, we will grow our business at least 30-35%. It can only be faster than that. That time will tell. But the margin profile is, I think, here to stay now. It can only increase from here.
Thank you so much, sir. Thank you so much for all the answers. I'm done with my questions. Thank you.
Thank you. Our next question is from Mr. Harsh Saraswat from Elegant Family Office. Over to you, sir.
Hi, Saurabh. Congratulations on great year.
Thanks.
My first question would be, how does ACE prices, in a comparable product compared to companies like JCB, Sensui, and other MNC players? Is there a price differential which benefits us also, other than, having service centers across the country and all?
Depends from product to product. I mean, backhoes is one category where JCB is a market leader. There are 7-8 players. And cranes are there where we primarily compete with the Scott's Kubota and tower cranes with Cocktail. So here I would say that if we specifically talk about backhoes, we are definitely better priced than JCB. And so are the other players as well, leaving aside one or two like Caterpillar. All of them are positioned 8, 10, 12% lower than JCB. So we are also pretty similar there. With respect to cranes, we are more or less similar in most of the sales with respect to our competition. But yes, there are ups and downs, depending on the customer profile or the size of the orders. And it also depends on our competition, how much they are willing to play with respect to, gaining the market. So we have to maintain that balance of market share as well. Forklifts, again, I would say that the main players are Godrej and Voltas, and also Toyota to some extent. And Toyota is definitely slightly higher priced than all of us. And the Voltas, Godrej, and as well, we are nearly similar bracketed with respect to price as of now. So a little up, a little here and there, depending on models, depending on customers.
Got it. And another question was, how does import work in this segment? Like, can you import a whole crane, or it is broken up and assembled here in India? And what are the import duties on this?
If I talk of backhoe loaders, India is perhaps, I think, the world's largest producer of backhoe loaders. So there are practically no imports.
Okay.
And something, even with respect to road machinery, maybe few units here and there, sizes and things which are made in India might be getting imported. But most of the global players are also present in India, and India is producing its own road machinery. Us guys and our competitors. If I talk of pick and carry cranes, we are the world's largest producer of pick and carry cranes. So we only export some of them from India. And going forward, those numbers are only going to increase, so there is nothing to worry about with respect to imports. But when I talk of cranes as a whole, pick and carry is the biggest chunk there. But then again, tower cranes are there where we are market leaders. And here we do get some Chinese imports. Very few European, I would say, especially in a very high tonnage or a very sensitive type of model which is not made in India. For crawler cranes and truck cranes, which has been a growing segment within the crane segments in the last, I would say, 10 years, 8 years, but especially in the last 4 or 5 years, yes. Here a lot of imports happen from the Chinese. And to be very frank, at ridiculous prices and ridiculous payment terms. So, the capex we are doing is currently to enhance our capacity in these crawler cranes and truck cranes, which is the higher tonnage cranes. The quantities comparatively are much lower as compared to pick and carry cranes. But yes, India is moving towards higher tonnage cranes because so much construction, elevated construction is happening. All the metros and the bullet trains and the flyovers. So yes, we need bigger cranes, and we are increasing our capacity there. So yes, but the bigger cranes currently, yes, the imports are dominating. But the numbers are minuscule as compared to pick and carry cranes.
Got it. So also on the export side, when you say that we will take our revenue to 10% of the total revenue, the export revenues, how do we compete against these Chinese players in the international markets, like on the prices and all? What do we tell the customers that we are giving more that they buy from us?
See, like I mentioned, the Chinese players are dominant only in the crawler cranes and the truck crane segment. Which even we are evolving in the country as of now. So we are rather focusing on our strengths. Let's say pick and carry cranes. We are the largest producer in the world, and India is the largest pick and carry producing country. India is one of the largest backhoe producing countries in the world. And especially a product like backhoe has, the product is well established in more or less all the countries. So we are focusing more on products where, our company or our country has a strength with respect to the product. As of now, we are not at all trying to compete in the crawler crane or the truck crane segment because the market size is small. The ticket size is big, but the market size is small. And we still have to create our strength there. I mean, we have strength. We want to increase those strengths in the country to be able to, compete effectively with the Chinese. So, like I said, we are focusing on backhoes. We are focusing on pick and carry cranes. We are focusing on some higher horsepower tractors, 80-90 horsepower tractors with respect to exports, where India is really good at.
Got it. Makes sense. All the best for the future, Saurabh. Thanks.
Thank you.
Thank you. Our next question is from Mr. Devesh Kesliwal from Antique Stock Broking. Over to you, sir.
Hello.
Yeah, hi.
Yeah, congratulations on a good set of numbers. I just wanted to understand the overall market size, the addressable market size that we have in the crane segment as well as in the forklift segment, and how has it grown over the past 2 years, and what are we expecting the industry growth to be in the coming 2 to 3 years, given the overall industrial activities that are going on? What is the expected growth rate in the industry as such?
Yeah, if you look at cranes, pick and carry cranes, because in our cranes segment, we report numbers for our pick and carry cranes, tower cranes, and also crawler cranes, truck cranes. But here I would say that crane segment has been, pick and carry segment has been growing at a good rate, about 20-25%. Tower cranes even faster than that, about I would say maybe a 35-40%. And something similar for the bigger cranes, where obviously we are building our capacities now to bring Indian products into the market. And going forward, I think at least similar momentum should sustain, looking at the overall scenario, if not faster. And even the construction equipment overall market size in the country has gone up by about 25% approximately in the last year, which gels very well with, because we are also focusing now on construction equipment to bring in additional growth. And we feel that it might be the fastest growing segment for us for a good amount of time now, going forward. Material handling has been a little, I do not know why, growing only at about 10-20%. I believe that would have been faster, but I'm sure with mechanization and manufacturing growing in our country, it will catch up very fast.
So is it right to assume that the entire cranes market that is there, so it will be ballpark figure around 2,500, 3,000 crores, and forklifts between 700 800 crores, that is now?
Yes, the entire crane market may be close to about 3,000 crores, or less than that, I would say. Maybe around 25, 26, 2,700. And forklifts maybe at about, I would say about 7,000 units. Because the models again range, so the pricing goes plus minus in that. But yes, I would say maybe about 600-700 crores, 700 crores.
Okay, and so one last question. We had actually rolled out some products in the crane segment. So the traditional products that we had, we had rolled out a manlet attached to a pick and carry crane and products like that, 2 to 3 products. So what is the overall traction on that side? Are we what is the overall demand, as well as how much of that, if at all you have those numbers, how much of that is contributing to the cranes revenue right now?
Yes, I think about 3 years back, just around COVID, we had brought in these multi-activity cranes, MX series. And yes, some time was wasted during COVID 1 or 2 years because people were not willing to spend money, and there was in any case hyperinflation happening all around. But yes, in saying that, in the last year we have seen really good traction there. And to be very frank with you, although the numbers there are small, maybe it's all about 3-4% of the entire pick and carry cranes that we are doing as of now. But they've already started contributing to our bottom line, and you can also see increase in our bottom line here and there. So this is primarily due to this changing product mix and obviously some realization. And going forward, already the type of traction and order booking which is happening for these MX, the new type of cranes, is very encouraging. And I think in the next 2 years, 3 years, they can easily become 10-20% of our portfolio of pick and carry cranes. And there the margin profile is really good because of the innovation part.
Okay. Thanks a lot, sir. Congratulations again on the good set of numbers. Thank you.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Our next question is from Ms. Jyoti Singh from Arihant Capital Markets Limited. Over to you.
Yeah, thank you for the opportunity and sir, congratulations on the great set of numbers. So my question is on the, you have guided 15 to 20% growth in crane and agri. So also you guided 20 to 25% that I missed for which part. And second question, I wanted to know your view overall industry, how is it going, and what are expectations going forward?
Yeah, see, we have projected 15 to 20% growth for cranes, for material handling, and for agri, and 30-35% growth for construction equipment, the CE segment. And I think the overall industry is also growing, but we have been lucky enough to grow faster than the industry. And see, especially in cranes, we were able to grow 38%, construction equipment 41%. And against the industry growth of around 20-25%. So that is an advantage we've been able to gain even in the last year, and we hope we continue to gain that advantage because that's how our market share will keep on increasing. What was the second part of your question?
Yeah, so answer another on the margin side, like we are targeting, it will expand 100 and 150 bits. So what are the strategy to, lead this EBITDA margin expansion?
Basically, it is, to be very frank with you, purely coming in from operating leverage. And as a matter of fact, it can be more than that. Pricing is sensitive if you have to maintain market share. So it is a mix of operating leverage coupled with wherever possible if we can increase our prices, coupled with the changing product mix, because yes, within the pick and carry range again, there is a shift towards slightly higher tonnage where realizations get better.
Okay, great. Thank you, sir.
Yeah, thank you.
Thank you. Our next question is from Mr. Rajiv Maheshwari from Praj Investments. Over to you.
Hi. Good evening.
Yeah, good evening.
I had a couple of questions, like in terms of we were planning some acquisitions as we discussed in the last couple of Concalls. So what is the current state on that, and if you can throw some light in terms of the utilization of the QIP amount?
Yeah, I think QIP amount utilization, Mr. Lupta will take that question. And regarding acquisitions, you want to elaborate?
Yes. Hi, good afternoon, Rajiv. And, as we had indicated earlier, that there were a couple of exciting opportunities for us, one in the backward integration space and one in the forward integration space. Coming to the backward integration, there was a company which had gone to NCLT It was a SME company where we were trying to bid for the company. However, unfortunately, the bankers and the COC have decided to grant that in favor of the existing promoters being an MSME. So that thing, for the time being, it has been kept on abeyance. For the forward linkage part, there was a acquisition which we were targeting, but seeing how this space, especially the cranes and the construction equipment space, is behaving, the valuations currently are not logical enough to go ahead with that acquisition as of now. Although we still are trying on that to keep the valuations at a logical levels. And if in case something happens in this space, we will keep everyone informed.
Apart from these two, there is nothing new in the pipeline which has come up, I believe.
No, there are 3-4 another opportunities which we are working upon quite aggressively. But these were the two on the very advanced stages which we had discussed in our earlier con calls as well. Apart from also, there are 3-4 other opportunities in some related space which we are working on.
Okay.
No, but I think his question was very specific on something which I think I have been able to figure out. No, nothing as of now, but we are expecting something.
Okay, yeah, to put it straight. And it regards the utilization of the QIP amount?
Yeah, as regards the QIP, we raised about 135 crore rupees, which is lying as such as a war chest for us whenever we acquire this company. And if you have noticed that our investment has grown up to 400 crore rupees. So not only the QIP proceeds, but as well as whatever the profits we are generating and has been conservatively used and has been put into the liquid investment so that as and when the time of opportunity comes, we are able to encash them and still remain a debt-free company after acquiring any of the companies which we have.
Okay.
As a matter of fact, we are also saving up this money for the opportunity maybe you were talking about.
Okay. That's good that the amount has gone up, so maybe it's for maybe something good may come up. It's good to know that. One thing I noticed that in the quarterly results, there is a difference in the other income mentioned in the standalone as well as in the consolidated. So what's the reason for that? I think the difference is close to 4 crores.
Yeah, which is actually the difference is basically because of the in the earlier in June quarter, certain that money has moved from the was wrongly stated as reserves, which has moved to the reduced from income and gone into taxation reserve. Because of that was because of the change in currency value.
No, but why is it then not that part not shown in the consolidated profit and loss account?
It is already mentioned. I will, if you can give me your email, I will probably explain it there much better. Okay.
Okay. I'll share my email ID. And one quick question: how's the electric crane going on in terms of any commercial production, the orders, and how are things on?
So we were waiting 3-4 months to commercialize it. So hopefully in the next quarter we will commercialize it. The excitement is very much there.
Okay.
We want to be very sure once we release the product in the market. So,
okay.
We had launched it to showcase it, and currently the endurance testing and all the cycles are being done up, and obviously the facility is being geared up to be able to produce. And we are also under capex because we are totally consumed in our capacities with our existing products.
Okay.
So I think in Q2 we should be able to commercialize it.
It's still maybe 3-4 months down the line.
Yeah.
Okay. Thanks a lot.
Yeah. Thank you.
Thank you. Our next question is from Ms. Vedika Singh from Monarch Networth Capital Limited.
Hello, sir.
Yeah, hi.
So what is the likely traction in the PE space that we are seeing, and what is our target revenue mix for the business in FY25 or 26?
I think we should easily be able to grow this business at 30-35% every year. To be a little conservative, and in saying that, So I think we should definitely be looking at a 325, 350 crores or maybe a little more than that in the current fiscal. And I'm going at a 30-35% increase ratio. So I think we should be hitting 500 crores in the next 1.5 to 2 years.
Okay, sir. And what would be the overall revenue mix coming from the MHE cranes? Would there be a deviation from our current product mix in 2 years down the line, sir?
Which cranes are we talking about, Vedika?
Sir, the overall revenue mix coming from construction equipment cranes, since we are so bullish on the construction equipment, would the revenue mix change?
Yeah, maybe a little bit in favor of construction equipment at the cost of, especially I would say metal handling and agri, because they'll be going slower. Yes, the crane, the base itself is big, so might be a small, very small, 1 or 2, 3% there. But I think over the next 2-3 years, construction equipment currently is our second biggest segment, already at 11%. So that should definitely start to look something like maybe at about, let's say, next 2-3 years of 4,000 crore revenue, 5,000 crore revenue, and this being maybe about 12, 13%, 14%, something like that.
Okay, sir. Okay. Sir, could you also share the progress on the Ghana front? What's happening and what's the timeline that we are following at present?
Yeah, unfortunately, we were looking at to start execution in Q1, but due to Luthra, would you want to answer that? You are more abreast with the Ghana news.
Yeah. Basically, there has been some discussions going on between the Ghana government and the Indian government, in which because the project was funded by the Indian government through Exim Bank of India, and we would have all the payments were secured from the Exim Bank, including advance payment and also. So there have been some regulatory issue between Ghana government and the Indian government, which is, I understand, is under discussions. So once that is, which we expect to be resolved very soon, once the Indian government gets clearance, then the Exim Bank will start making payments to us. So we'll start the project only when we get advance payments, because we don't want to take risk on the government as such, but we only because of the secure payment we do the business.
So hopefully the situation should, should be resolved in the next 1 or 2 months, and we are looking at our payments going through the Exim Bank most probably in the coming quarters. So we are hopeful that, we were expecting Q1 to start execution, so hopefully Q2 we should be in a position to start execution at some time.
Since before now, we have not put in any capital towards Ghana, right, from our end?
Not really capital, but a lot of intellectual capital, I would say, because all the planning and with respect to, the plant that is going to be set up there, and with respect to the proposed ordering for that, most of the homework has been done by us, finished by us.
Yeah, but we have not spent any financial commitment as such to vendors and everything, so
we have not deployed any capital as such.
Yeah.
Okay, sir. Thank you so much, sir.
Yeah.
Thank you. Our next question is from Mr. Surid Deora from Paladin Capital. Over to you.
Yeah, hi, sir. Just one quick question, accounting question. Could you explain what is impairment losses of financial assets?
Impairment losses of financial assets. Luthra, sir?
Yeah, so basically, this is the making a provision for the expected credit loss, because recently the accounting standard has been revised from last 1 or 2 years, and which has made a we have made a stringent policy of making provision for overdue, which are more than 6 months or so. So depending on those policies, and because of the historical trend and all those things, we have made a expected credit loss. This may not happen, but we have made a provision, so that is shown separately as impairment of the receivables, basically.
See, to be very frank, in short, DSR, in a way, KPMG has become our audit firm now, and so they wanted to make the provisioning very transparent and very clear. So although most of these payments are recoverable, but they have provision for it under this.
Okay, so is it fair to assume that the receivables that are shown on the books, the rest of them are likely to materialize over the next 12 months, and you won't see such a large write-off going forward?
Yes, anything possible. DSR has made sure it is provisioned. And, but in saying that, most of the provisioning is actually recoverable, to be very frank with you. So, and whatever debtors which are balanced are 100% recoverable.
Okay, got it. So this is a one-time thing.
Delayed a little beyond 6 months or whatever, like Luthra was saying, and they've been provided for.
Got it. Thank you. All right.
Thank you. As a reminder to all participants that you may press star and 1 to ask a question. Our next question comes from Mr. Jitendra Petkar from JD Capital. Over. Mr. Petkar, please go ahead with your question, sir.
I think we can skip and go to the next one.
Our next question is from Indumati Rangan, an individual investor.
Hi, I have a few questions. My first question is, in the last conference call, you said that the Chinese are selling large cranes in India at very low prices and giving 1 year credit to buyers. But we are entering the large crane segment by building a new plant for it. So how are you going to compete with the Chinese players who are selling at such low prices and also offering 1 year credit?
In all probability, by doing the same thing, by offering competitive prices and wherever possible credit terms, obviously secured credit terms through LC and all. First, I'll start with the credit terms. We have tied up with some banks at a very good interest rates with respect to sale bill discounting and LC discounting, wherein I think we should be able to compete with the Chinese on the credit terms. And I'm sure as soon as there is an alternative available, the customers will start to prefer Indian buyers. Yes, with respect to bigger cranes, their prices are really ridiculous. With respect to margin profile, we would have thought that bigger cranes should not be less than 20-25% EBITDA levels, but still they are not that bad once we produce them in good quantity in India. Our only I think in the last 4 or 5 years, what was holding us back was the possible margin profile. But once we calculated that after increasing our business by around 5 times and competing at same prices, so because of the operating leverage part of it, which will come. I think last year we did the bigger cranes, just pulling out the paper, just a second. Close to about 130-140 crores approximately. And obviously once we are doing 400-500 crores and the operating leverage that will come along with it, I'm sure will help us compete with the Chinese.
So my second question is, the Chinese products are now being imported. But you will be manufacturing the large cranes in India itself. So that will give you a logistic cost advantage, correct? Is that logistic cost advantage going to be an important part of your competitive advantage? And what percentage competitive advantage will you have because of the logistic cost?
The logistics will give us anywhere between 7 to 8% advantage. But apart from logistics, another part is, the Chinese machines which are being imported, they also attract a 7.5% custom duty. So that barrier is also there. But even after calculating all of that, they are still being very competitive. And in a way, you can say some sort of dumping. So we are also, we've been in talks with MHI and DGFT with regards to these ill practices of the Chinese companies. And they are also, and if something like that happens, then it can be much more beneficial in our favor.
Thank you. Now from Phillip Capital, TCG. Over to you.
Yes, sir. Yeah, good afternoon, team. Congratulations for the good show. Sir, two things. I just need a clarification on, say, like when we are guiding for crane segment to grow at maybe 15 to 20%. So are we considering the incremental revenue from crawler crane, or it is not factored in this guidance?
As of now, no, to be very frank with you, because the plant will become operational next quarter. And obviously, we will have some incremental revenue with respect to crawler cranes and truck cranes. I'm sure the numbers will double up at least in the second half. So yes, there could be additional 30, 40, 50 crores which might trickle in, but we have not factored that in.
Probably that would come in Q3 or Q4, right?
Yeah, Q3, Q4. And to answer your question very frankly, we have pegged it at 15-20%, the crane segment, but I think it is going to be bigger than that.
Fantastic. And sir, another thing on agri side. So like as we have reached the optimum side for optimum revenue for construction equipment, which is reflected in your margins as well, which is similar to your crane segment. So for agri, what could be that optimum revenue side revenue where we can see some margin improvement, because that is the one of the segment where we are not able to show the margin improvement. So any thought on that?
And it is also our pain point.
Exactly. So like once the margin improvement is visible in that segment, then probably you would have all four product basket, which is roughly 10 to 12% kind of EBIT margin. So that's why need some your thoughts on
when agri starts to perform, believe me, we will start doing more than 15%. But in saying that, I think just similar to backhoe loaders, I mean this construction equipment, as soon as we start doing at 70-75 crores, I would say 75 crores at least on a quarterly basis, let's say 300 crores on an annual basis, which I think is really not possible in this coming year, but definitely in the year after that. Our margin profile can be similar to other segments like cranes and construction equipment. And similar questions we were being asked 2 years back regarding our construction equipment, and we've been able to solve that and bring it to normalcy. So hopefully, I mean, not in the next 1 year, definitely you'll see improvement in the agri. But I think FY23, if you are able to do a 300-350 crores turnover, I think, the margin profile will start to look very different.
Got it, sir. Thank you very much and all the best.
Thank you.
Thank you. Our next question is from Mr. Jitendra Petkar from JD Capital. Over to you.
Can you all hear me?
Yeah, we can hear you, yes.
Okay, thank you for taking my question. I have two questions. One is about note 11 in the result, which mentions some corrections that have been made for the previous year's consolidated results. Is it because of changing in the accounting practices? What is it? Is there any impact, financial impact on that?
Note 11. Yeah, actually there is no financial impact. There are certain regrouping from one head to another head. So these are basically all balance sheet items only, where some loans have moved to advances and all those. So these are small corrections, you can say, as per because with the change in auditor, so different view has been taken on that it should be shown as security deposit or rather than advances, and that these are. So if you have noticed that there has been no change in the financial profit and loss, no restatement of the profit and loss for the previous year. Yes, definitely balance sheet has been restated, but very minutely in certain heads from moving from one head to another head, and in the similar category. Some assets from financial assets have gone to other assets, and that's all. So no significant impact. on the net worth or on the reserve and surplus, no significant impact on that. No effect on the net worth and the book value of the share.
My second question is about defense as a new sector. Is there any possibility of business growing rapidly there in that sector?
Yes, there are definitely possibilities. I think 2.5 to 3% revenue contribution has come from defense in the current year, and internally we have targeted 8 to 10% revenue going forward as soon as possible to come in from defense sector. So hopefully, I think this year would be better than last year with respect to defense business, and we are working on different projects, different requirements. Gestation is slightly longer. Sometimes they click quickly, sometimes, but generally they take longer. So that's where we stand. Internally, we plan to take revenue contribution from defense to 8 to 10% eventually. Currently, we are working at about approximately 2.5%.
So going forward, we hope to get more traction and a little better margins in the defense?
Yeah, I mean, good margins. Margins are reasonable generally in the defense business because the products and the requirements are pretty typical and sort of tailor-made. So I think they will be in sync with the profile of the segment we are working.
Fine. Thank you and congratulations for good numbers. And I hope the impact of this Note 11 is not more than about 4 crores as it can be generally seen broadly as I can see.
Yeah, I think again because of the new auditors, so wherever you understand very well, wherever they thought maybe some grouping or whatever Mr. Luthra was explaining, but there is really no financial impact, right, Mr. Luthra?
Yes, there is no, as I stated, there has been no impact on the profit loss of the last year also, and the only restatement was basically in taking some investment as current or to non-current, and only this movement has been from one head to another head.
Thank you very much.
And now there will be no future adjustment because now we have aligned our number as per the KPMG requirements.
Thank you. As there are no further questions, I would like to hand the conference over to the management for closing comments.
Yeah, thank you. About 2.5 years back, I planned and conceived that by FY24, we will double our turnover from about 1,100 crores and take the company to about 2,500 crores. So as of now, we seem to be on track to take our company beyond 2,500 crores in the current financial year. And going forward, I think this would again be our endeavor to double ourselves in the forthcoming 3 years. And as conveyed, we are looking at 15 to 20% growth on the conservative side in the current year, which will be driven by cranes, metal handling, and agri with about a 15-20% contribution, and construction equipment at a slightly better pace. And more importantly, I think double-digit margins for us are here to stay. And within the coming quarters and this year, I'm sure we will be able to further increase our margin profile by at least 100 to 150 basis points, if not more. And the scenario in the country seems to be good and buoyant. Yes, slight dependency on the monsoons, I would say, because that does impact the buying pattern a little. But on the whole, things seem to be on the right track, and we seem to be heading in the right direction as per our plan. Yeah. Thank you, everybody, and good evening.
Thank you. I will now hand over the conference to Ms. Vedika Singh from Monarch Networth Capital Limited. Over to you, ma'am.
to the management for taking us through the FY23 results and a promising future outlook. Thanks to all the participants for joining us today. We would now like to close the call.
Thank you. On behalf of Monarch Networth Capital Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.